What is going on, guys? This is KOJOFOREX, aka GPP Emperor, aka Emperor of Blues. In today's video, I'm going to run you guys through how to properly backtest as a trader, right? So I've not really done any backtesting video with you guys before, but in today's video, I'm going to aid you on how to properly backtest, the tools to specifically use in backtesting, and then the way to get the most out of backtesting. So this is going to be a full-on-full chart work. We're going to really break the chart down. I'm going to take one currency pair and then break it down using the backtesting tool that I use, which is the TradingView, as you may already know, and then go full on breaking down one currency pair, backtesting it from some time back all the way to its current time, running you to how to be thinking as a trader, whether I'm going to take a trade, whether I'm going to let it pass, why I'm going to let it pass, why I'm going to take a trade. And before this video ends, if you're really able to sit down and watch it to the end, you're going to really understand so many things. You're going to pick so much key details and insights. You will likely see behind the veil or the real reason why I take certain trades and let certain trades slide, and also why certain times I can be solely quiet on my channel and not have any trade going on, then all of a sudden I just come banging with so many trades, right? So let's go right into the chart and I'll show you what I have for you guys. Yeah, guys, so I already told you that in today's video I'm going to show you into details how to backtest as a trader. So for the purpose of this video, we're going to be using the TradingView. You guys know that I've been using TradingView all the way from like 2017, 2018 ish, and I use a paid version, the premium version, right, which is like their highest version. So with this version, it allows me to be able to log into at least 5 computers and then be able to save all my chart works. It just allows me so many presets that you don't have on the free version or even on the lower grades. So I'm going to be using Bitcoin for this purpose of this video, and what I'm going to do is that I'm going to just scroll all the way back into time and then start doing my backtesting in terms of like trying to practice with the concept that I have in mind. But before I do that, let me introduce you to why I trade with TradingView. So TradingView on its own has so many analytical tools, and one of the tools that make TradingView exciting to use in terms of, you know, backtesting and then doing all those practical work is what we have here, which is the replay tool. So as a trader, this tool comes in very useful, comes in very handy. And when you have this tool, what TradingView allows you to do is that you can go into previous date or past dates and then cut it and then run it through to play all the way into the current date, right? So once I do that, you're going to understand the practical means of what I mean. So I know certain traders that don't use TradingView at all. I've met people that have trained, even people that live abroad, that have not even heard of TradingView at all. And it saddens me to know that we live in a world where things have become so accessible to us, so easy for us to be able to get our hands on, and then people refuse to adapt to new things. People are still stuck on the old version of the MT4, and then they are still very rigid in their analysis. They are not really able to have that flexibility in analyzing and then using the TradingView functionality. So spend a few dollars, subscribe to TradingView, and then, you know, get the functionalities of what I'm about to show you. So if you come here, like I said, with a replay tool, in subsequent videos I'm going to take my time and go into details in breaking down TradingView, in and out, all the tools that I use on TradingView. And it should be very interesting for you to be able to set up your TradingView to look exactly like mine. I hope you guys will like that video as well. Right, so I'm going to just go back in time, and then let's say all the way from here is where the market currently is. But for the purpose of this video, I'm going to scroll back and say, let's say we stop somewhere here. So upon stopping here, it's like now we've cut some previous happenings in the market, and then we want to backtest this into its current state according to how we trade or according to our reasoning in the market. Now I'm going to be displaying, or I'm going to be using a few concepts that I've taught you guys with, right? So some of the concepts that I've taught you guys is my trend line concept, right? Then I've also taught you my support and resistance concepts, unlike the other ones that you guys know on YouTube or learn from your trading books anyway. Then I also have the Fibonacci concept, and also I have my psychological levels, right? But more on this later as well. So for the purpose of this backtesting, I'm going to be using these concepts that I have here, right? So if you don't really know much about these concepts, then you may want to just go into my previous videos and then go watch my video on trend line, my video on support and resistance, Fibonacci, any of them, and then you get the fully understanding. Now, when you give me a chart like this, or when I come to meet the market like this, first thing that I think about is that where are we in the market? So I'm already asking myself that what is the high end in the market and what is the lower end of this market? So obviously the higher end of this market is this point right here, and then the lower end of this market is also this point right here. Now, what is the purpose of this? It gives me like a summarized version of where the market has been for the past few days. So when I do this, it plays on the concept of technical analysis, which is like using historical price action to determine future price actions, right? Or historical price action to determine future price movement. So you cannot say you're using technical analysis when you're not really using historical prices. And then for you to clearly know historical price point, then you must be able to use certain markings like I have done here. So this markings basically spells out what I would call like my support level level or resistance level in the market. So I tell you that any price point at which the market reverses at the top side, it stands on its own as a resistance level for me, and any price point at which the market reverses at the bottom also stands as a support level for me. So that's exactly why I have it. So you're going to see that at this top right here, it stands on its own as a resistance for me, and then at the bottom right here, it also stands on its own as a support level for me. So let's see how I am going to be dealing with this. At the moment, when I see the market like this, I'm expecting I should go to the higher bands, which is like trading its way all the way back to the upside here, or lower bands, which is trading its way all the way to the downside here. So as far as any of these two conditions are fulfilled is when you see me taking any trade action on the market. So let's play this forward and see what exactly transpired with this. So if we play this for now, what it means is that as far as I am watching the market trade according to this direction, there's no point I'm going to take any trade decision unless they come to my predetermined zones, and that's what makes you a sniper trader. So a sniper trader is not necessarily waiting for trade positions and then catching that weak entry. A sniper trader is somebody who hides behind the view, wait for the market to come into their zone before they pull that trigger. So I'm going to really wait, no matter how slow the market is trading, and then wait for it to just tap into my zone. And then upon waiting for it to tap into my zone, that means that I may sometimes get busy along the line. And if I get busy, you know what I do? What I do is that I do set an alert. So TradingView also allows you the functionality of setting an alert. So the moment we click on this, then we can just decide to set some alerts here as well. So when I click on this, you say alerts are not currently available in replay mode. So because I'm using the replay mode, it does not really allow me to set an alert. But if I was supposed to be in the future mode, then obviously I would have been able to set that alert. So what that means is that when the price trades, like let's say it's coming down like this, price is coming down like this, and then it taps into this, then TradingView is going to send me an email, or it's going to be beeping on my screen and tell me that price has got to your zone. So what do you want to do? Then I start to take precaution, or start to take keen interest in that level. So let's see what happens here. Let's see indeed where this market intends to go. So it's still trading sideways. There's no decision I'm going to take until it hits that price zone. So upon hitting that price zone, then I begin to now zoom in. So this is how you want to backtest, right? So I'm asking myself that, okay, I'm watching this level. Remember, I'm on the 4-hour time frame. So this candle just closed. Does it give me any bullish presence? Not as much. It's just like a bearish candle that just traded all the way down. So what do I want to do now? I want to wait and see the next subsequent candle. Yeah, so I've got this subsequent candle. Does it give me sufficient evidence that this market is going to go up? Not as much, but for the fact that the market has dropped all the way from this top and then come to hit this level, that's extensively traded in the opposite direction. What I mean is that it started dropping from here, traded, went sideways, and came here. So upon hitting here, sometimes in such a move, you don't really get the market just wasting time in that key zone that it hits into. So how you can be able to take advantage of that as a trader, sometimes you may want to, look into the lower time frame. By lower time frame, I mean anywhere like the 1 hour, 30 minutes. If you look at this, you can see that we have this huge 1 hour bullish engulfing candle. So if it convinces me, then I may want to just take a trade here and put my stop loss right beneath the range like that, and anticipate my take profit anywhere in these highs like this, right? But since we are doing analysis on the 4 hour, it's better we switch back to the 4 hour regardless of the fact that we took our entry on the 1 hour. So let's see if this trade hits our stop loss or goes in our favor. And voila, it went in our favor. By then, you should have expected to put your stop loss at break even, and then this trade would have gone as much as 80 or 90 pips. So this is how you follow to do your backtesting, right? Nonetheless, we've created this low, the market has gone up. Could we have even reached our take profit level, which is formally what we decided, which is all the way up there? So when I use the backtesting tool, let's see if indeed this market did go into our take profit level. It didn't actually hit to the higher bandwidth of our take profit level, and then it started coming down. So that's why it is important as a trader to take partial profit along the line. But by here, I would have removed all this and then placed this back right here as my new support level in the market, right? So I tell you that at any reversal point in the market, it becomes my new support level. So you saw that I quickly removed that support point from here and then replaced it here. And now we saw this market tapping into this, right? Let's see occasionally what happens, or subsequently what happens. So we want to find out if the market is going to give us our next opportunity. We are looking at the higher end somewhere around here to be like our next level of minor resistance in the market, even though we know the highest resistance point is right here, right? Let's use the backtesting tool quickly. So this market is just trading sideways, sideways, sideways. It's not really making any effort to hit those higher ends in the market, right? But upon trading sideways, it is only prudent that as a trader you open your eyes. We can sort of start seeing some signs in the market, and then the signs that I'm beginning to see, maybe some have seen it already, some have also perhaps not seen it already, but we can sort of mark these signs down by sort of anticipating that this market is creating some form of a triangular pattern, if you can clearly see, right? So you have to just picture that down and then watch the market do its own thing. So the market is still sort of trading in that triangular range like that. Is it going to trade out of that range? So in sort of a asymmetric triangle, you know that if you've not learned it asymmetric in any of my previous videos, then you want to watch my chart patterns video. Asymmetric, what happens is that the market can intend to break on the upside, or the market can intend to break on the downside, right? So for asymmetric, I really watch at the pinnacle point of the triangle, and then wherever the market wants to break to, then I intend to jump in. So seeing something like this and then being convinced that we've seen this sort of bullish engulfing candles right here, I may want to test this market out with a few pips, right, and then put my stop loss maybe somewhere here targeting these highs here, right? So this is how you do your back testing, right? You use the concept that you know. First I've used the support level, we saw how it played out. Now I'm using chart patterns, even though I didn't list them here. So we may want to even add chart patterns here as well, right? So we're going to be using chart patterns. So let's see what happens with this. Boom, we hit our take profit level, and then we're still back testing. So the chart pattern actually does work. This confirms that indeed chart pattern work in the market. But now the market has visited our minor resistance level here, so we want to now observe price action within this range. But before that, our new support level for this one becomes this price point here, and then this is the minor resistance the market has created. So let's see if we're able to make any trade decision from here as well. So there is this bearish drop, the subsequent another bullish movement. So you can see that we haven't really still had any sort of a bearish presence here. We've not really had any bearish presence. So obviously I'm not even thinking about any trade ideas around these regions, since I have like my resistance level here and I'm just watching price action within here. Then subsequently we have this bearish engulfing candle right here. So upon having this bearish engulfing candle, I may be interested in taking a short position somewhere around here, or I could wait for price pullback a few pips in the opposite direction, maybe somewhere around here, and still take the same entry direction. If I want to wait for a better pricing, then I would wait for the pullback. But if I feel like price could just drive itself away, then I wouldn't necessarily wait for a pullback. Regardless, I'll still have like a small skin in the market, which is like a few lot size, to see if this market goes in my favor, right? So the whole concept is that now we used the support and resistance concept, we've used chart patterns, and now we're seeing how this one is going to play out. So boom, we hit our take profit, comes into our favor, and then begins to go in the opposite direction. So by here, I expect that your stop loss should have been at break even. You take some partial profit because this market did indeed move about 143 pips, right? So 143 pips on Bitcoin is not a joke, right? So we adjusted quickly, and then we were probably, or we're sort of waiting for price to come back into our support level right here. And then our new resistance level would be this one right here. So we're waiting for price to also come into this resistance level. So now that we've done that, we can also sort of try to plot some sort of a trend line here, because now we have trend line scenarios coming in play. We have the 0.1 here, 0.2, and then we would be anticipating 0.3 in the future as well. But now we have some few things to look out for, right? We don't really have a most relevant trend line from the upside, because it's sort of far away from the price. If we point out from our 0.1, 0.2, 0.3 is sort of far away, but for the purpose of education, we may just want to leave it there and then see how price unfolds with this one, right? So let's see how price unfolds here. So it's trading sideways, nothing much. So remember that all while that price is trading sideways, there's no decision that I'm going to take, because I've already set my key zone. So 0.1 is here, my next area of interest is on the trend line, and then my next area of interest is also on this resistance level right here, or perhaps this resistance trend line right here. So you can see that what I have 1, 2, 3, 4 points of interest in the market, and at any point that the market visits, I want to see how price is going to react there before I take any trade decision. So let's see how price reacts. So trading sideways, So you see how patience really pays. All while that the market is trading sideways like this, there's no decision that I'm going to take, not even a single attempt to trade the market. Just going to keep watching it while I have set my rules down and waiting for price to come into my key zone. So we now can see price moving on the upside, approaching the resistance level that we set. Right, so what I observed is that so many traders, when they have already set their resistance level or target like this, rather than just wait for the price to come into their zone, they don't do that, and then the moment price is sort of quite close like that, then they start trading against the trend. They start sort of like shorting the market here when price has not even gone there, and then what you have happening is that sometimes price can just go against them significantly, and they're going to be like in a huge drawdown, perhaps before the market intends to come in their favor, or it doesn't come at all and then it just keeps going. If they have stop loss, they would be taken out. If they don't have stop loss, then that's where they blow their account. You don't really want to be that type of a trader that stands in front of a moving trade. So this is exactly what I mean by standing in front of a moving trade, right? And then there are other people who are also actually going to wait for the market to hit that price point. But the moment the market hits their resistance level or price points or points of interest, then they start also selling against the market. Now the point is, you don't really know if the bulls have exhausted their momentum here. So if you're a trader that starts shorting very early when the bears have not even shown their presence, you are likely reacting like the trader who did not even wait for the market to get to their level. So per this concept that I've shown you here, or per this perspective that I've shown you here, then you really want to wait for the market to start showing some signs of a bearish movement or bearish reversal signals before you decide to take certain trade decisions like that. Now let's see what happens here. So observing this, right, we had this tweezer here, so we may have been interested in even looking at a short position here because the market has come to the resistance point and printed a tweezer, right? But usually for what I teach in my inner circle, tweezers on the first reversal pattern, it's not really a significant price point. It's not really a significant reversal pattern for us to take a trade on. Nonetheless, we may have a little skin in the market and wait for subsequent confluence in reversals. But here we may anticipate our take profit somewhere here because it comes to the third touch of the trend line, right? So let's see what happens. So puts us into a little bit of profit. So here we realize that we would have been in about 45 pips in profit already, and then in 45 pips in profit, what you want to do is that put your stop loss at break even or take some partial profit, right? But quickly we see that this market reverses back into the opposite direction, right? So upon the market really reversing back in the opposite direction, quickly what we do here is that you see here the market printed a new resistance price point, right? So it is also important or significant to realize that at any weak reversal in the market, it stands on its own as a resistance, just like I've taught you, and then we wait for price reaction at those points and see if we're going to take a trade decision on them as well. So here we can also see that price is beginning to also print the same reversal pattern, because here had already reacted as a resistance, and then the market has just, you know, used the same weak point to signify as that strong, so it becomes like a strong resistance region. So here at that point you don't really want to wait for so much confluence in the market or wait for so much candlestick reactions on the market. You are safe if you want to take a trade position like this upon the first reversal pattern that you see, right? So let's see how this one also plays out, right? Quickly we see that the market just puts us in huge profit, and then it rolls all the way down like that, right? So time is not going to permit me to complete this whole breakdown, otherwise this video may be extremely long. It could run us all the way into like the 40 minutes or 50 minutes, right? So I'm going to end here, but I promise you I'm going to continue exactly from here in subsequent videos. If you love this video and really want me to do such a breakdown like this, and for you to also follow the market successively, then smash the like button, subscribe to this channel if you haven't done that already. Let's hit the 150k subscriber mark. Click in the link in the description to join my KOJOFOREX Telegram community. I drop trade signals for traders for free. I also organize Instagram live sessions on my Instagram at KOJOFOREX, KOJOFOREX, and I call out trade signals for free. You can check on my Instagram story and see that today I posted trade signals on GBP USD and traders followed me for it as well. So I'm going to see you in the next video. Without wasting my time, peace.